Traders, this is Rob from BuySide Global. Uh, I wanted to address this particular question for a long time because a lot of our customers have the same question in a different way they ask. In short, how to trade with a small dollar value or small stop loss risk. In the end, the idea behind the day trading is we need to minimize the loss and then maximize the profit. That is not possible until you learn how to enter your trade with a minimal stop loss risk. Okay, being that said, let's get started. Like I said, people ask a lot of same question in different ways. Rob, I don't want to risk too much dollar value, but how can I enter? Because can I have? Is it possible to enter trade with a small narrow stop loss, or what is stop loss based trade entry? And very common one, can I use fixed stop loss for my trade? It doesn't matter. It all comes down to how to enter the trade with a minimal stop loss risk. So let's get to it. Before I get to it, please understand this video is meant for educational purpose only, not to solicit anything. Please read the CFTC rule 4.414, and also the full disclaimer can be found in buysideglobal.com/disclaimer. Before I talk about how to do it, I want you to focus on what not to do. That's very much important. I have seen this particular mistake again and again by a lot of traders. How many times I heard the similar line, I blown my account. My account is I had huge losses, and then I don't want to trade anymore. My account in the prop trading account, I lost it. A lot of reasons. It's all about burnt account, lost my investment. A lot of ways is coming down to the risk that you have in the trade. When you keep losing it, that's when it's tend to happen. So let's talk about what not to do first. All right. One of the most common mistake is they know when they have a opportunity to enter long or short. That too, when the price moves really fast, most beginner traders chase the entry, enter the trade, and then set this stop loss few ticks away from where they entered the trade. In other words, you enter the trade randomly, not randomly, you enter the trade first and then try to enter the stop loss based on what you enter, right? So that too, sometimes we just, price is moving fast, you are getting slow, right click, mouse, everything, price still move fast, you enter a market order, you actually want to enter a little bit early, but the price moved, you entered late, and then you pick the stop loss randomly. That's the best recipe to get stopped very fast. Okay, if that's a mistake, how actually you can do it? So sometimes if the price moves fast, if you miss the opportunity, you miss the opportunity. Don't try to chase it. Let it go and wait for the pullback. Okay, most of the time when you missed it, don't try to chase it. That's the most important point. Stop loss entry is more important than the trade entry. You can't just pick random stop loss levels just because you enter the trade in when the price is moving fast in the direction that it's going to move. Okay, so let's talk about, if that's the way everybody is doing it in terms of it, how exactly, what is the best way to enter a trade? Again, don't enter the trade anywhere and then add the stop loss few ticks away from your trade entry. Instead, I wanted to do this way. Determine a solid stop loss level, where exactly the stop loss should go if at all you're going to take the long trade. Let's say you're going to take a long trade. First, visualize or determine, if I take the long trade now, where will my stop loss go? Okay, determine that stop loss level first, and then try to enter your trade close to the stop loss level. Okay, that is exactly opposite to what the common mistake we talked about, which is you enter the trade first and then entering the stop loss later. Instead, I want you to think a little bit reverse. If you think it's opportunity to enter long, okay, if you wanted to enter long, there is opportunity to enter long. First determine, if I enter long, where should my stop loss go? Okay, once you know what is the solid stop loss level, try to take the entry close to it. What do you make close to it? Wait till the pullbacks, or wait till the price action come a little bit close to it, and then try to have a reaction. Then you can take the entry. At that time, the closer you are taking a trade close to stop loss, then it's minimal risk. Again, most important point is stop loss should go where the stop loss should go. You can't enter the trade and pick the stop loss anywhere. Okay. In that case, the next question you can ask, what is the really a good stop loss level? I know how to enter a trade when the pricing is moving fast. I see a long opportunity, but how do I know what is the perfect ideal stop loss level to use the strategy? Okay, let's look at this. A really good stop loss level is a clear separation of clear point of failure of the trade. In other words, let's say you are going to take a long trade. If you're going to take a long trade, you should know what is the exact price level. If the price stays above this level, the long trade is still valid. Okay. If the price crosses below this level, long trade no more valid. You need to know what exactly the line above is long still valid. If it crosses below, there is no more opportunity in long trade. You need to know. I know it's I can say it easily, but it's hard to understand, hard to visualize. So let's go to the little bit. I want to go to the chart, but I want to explain a little bit clarity here. I know we have seen this screen so many times. What is this? This is resistance, demand and support level. The price bounce in between on the consolidation range. It breaks out. Supply becomes demand. When the supply becomes demand, that is a great opportunity to enter long. We talked about this. Our automated signal generator uses this algorithm, everything. But in this case, where does your stop loss go? Right here. When the supply becomes demand, when the breakout and then either doesn't matter whether you're going to enter immediately after breakout or after it rebounds, doesn't matter. You should have your stop loss on this. I have this line here to mark the stop loss. Why? Think about it. If the price stays above this line, that means price broken the supply, still stays above the my stop loss level, the long is still valid. Think about, if the price comes down, crosses this stop loss line, coming back to the previous consolidation area, it's no more long. It's the trade failed. You got to move on. That's why I said, if you go back to the point, it is a clear point of failure of the trade. You need to know which exact price level where the trade will fail. If a price stays above this level, long trade still valid. If the price crosses below this level, there is no more long trade. Now you can see exactly. Now I have the exact line where the stop loss should go, couple of ticks below the demand zone, where if the price stays above, yeah, that means still we can have a long trade. Okay, so hopefully I'm able to explain better. If you have any questions, reach out to us. All right, so I want to go back to the chart a little bit to explain the same concept. This is a 5-minute chart. I know this is not the way I'm going to explain, but I want to tell you, look at this. I took example from February 8th and February 9th because this is one of the choppiest today, and then price started moving. There is no way we can find a good opportunity in a chart like this. That's why we use our price action chart. This is BuySide Global zone entry signals indicator, where you can this is price action based chart. Okay, so let me go to, this is, if you go to There, this is a pro bars chart, ES 10 and 2, and if you go to the indicators, I have a BSG supply, BSG zone entry signals indicator. We have 5 algorithms here. I turned on only one because I want to show you only one example that I showed you just before. Consolidation, breakout from the consolidation, or retest above the consolidation. So that's exact algorithm I enabled here. And you can see right here, price was almost, you can see February 8th, February 9th. The whole day it was a choppy, price bounded. Finally it broke out on the top supply and then demand formed. The system generated signal right here. Okay, so if you are going to enter the trade as soon as a signal generated, you will be entering right here. That means 1, 2, 3 bars right here. But where does the stop loss go? Always couple of ticks below this demand level, right here. Look at the risk, how much risk you're going to take from here to here. It's up to you. If you want to take that risk, it's up to you. So risk is a personal choice based on account size, based on everything. But this is a lot of risk that a lot of traders don't want to take risk. The question is, how can we use this signal, the trading signal generated by the system, at the same time, how can I enter the trade with a minimal stop loss? Okay, so that means let's go back to the foundation we talked about. Determine the solid stop loss level, then enter the trade close to the stop loss level. In this case, stop loss level goes right here, couple of ticks below the demand zone. Instead of entering right away, I'm going to try to wait till the price come back to that level. Okay, I can have the limit order right here, top of the edge here. That means if the price come back to the zone, I'll be entering the long trade. My entry price is here, stop loss price is here. It's just a minimal compared to here. If I enter here, think about this, almost less than half of what I will enter immediately after signal. So again, to reiterate, know your strongest stop loss level. Stop loss should go where the stop loss should go. There is no trade-off. Don't. Now I determine where the stop loss should go. We have to wait till the price come back close and then enter the trade. Okay, this way we have less risk. Less risk. So this is better than in terms of entering immediately. Yes, you can ask me in terms of, Rob, when sometimes the market when moving fast, when signal comes in, it moves really fast. Those days, even here you can see the price, there was a signal right here because it was supply and demand. It broke out and then retested here. We have a signal right here. Even this one didn't come back to the zone to enter again based on the strategy that I just mentioned. But I want to look a little bit closer. Signal comes after at the third bar here, right here. If we enter the trade here, that means you're taking the risk from here to here. Stop loss goes here. But if you notice, almost couple of times there was a pullback. Do you see this? The pullback price came to close, price came close. Always there is a pullbacks. Not to this extreme, but to some extent pullback. It's still off the risk. Think about it. Instead of entering the long here, stop loss here, you are entering the trade here and stop loss here. Still you are using the BuySide global supply demand trading signals. Instead of entering right away, you are entering, look at this, from here, stop loss here. If you enter on the pullback here, it's almost off the risk, off of the risk. Okay, so even if you don't have the pullback, you don't have to enter. Think again in terms of, you don't have to take every single trade if that does not fit your risk profile. Okay, so all your trading depends upon what kind of risk you want to take, how much risk you want to take based on your account size, your your P&L so far for a week, everything. So learn to enter the trade with the minimal risk. That means in both cases, even here we know it's a solid long signal, because even here it broke out from the longest consolidation. We have a signal, supply become a demand. It's a very good signal. Instead of entering immediately, waiting for the pullback to enter, again supply and demand broke out, came back, retested, we have a signal. Instead of entering right away, we are waiting a little bit pullback and then take it. But again, please have the stop loss always wherever it should go. Do not pick a fixed stop loss. That is never gonna work. Look at this one. Even if you enter the long here, stop loss, fixed stop loss somewhere here, you're gonna get stopped out. Again, trust the system. Try to have a minimal risk. If the trade moves fast, there are trades it moves fast. I can show you a lot of trades. Look at this. There is no pullback. It moved fast. If it moves fast, it moved fast. Let it go. Don't chase it. Don't chase a signal. Even if you take the few trades, try to take the quality trades with the minimal risk based on your risk profile. Okay. Let's go back to the presentation here. Okay. One more thing I want you to address before you start using it. Okay, so which is here. I want you to be cautious of, don't try to catch a falling knife. Please, this is very, very, very important in the strategy. Okay, so let's look at this screen right now. There is a short trade signal right here. You got the signal. I think the signal appears after the third bar right here. Okay. You can't take it because a lot of risk. First of all, that means you're going to wait till the pullback. Yes, the red line marked where your stop loss should go. That means stop loss is here. This is too much risk. We're going to wait pullback. Okay, market is going back to your close to your stop loss. Oh, you can think, oh, it's a great way to enter the trade right now. Please don't take it immediately. This is called falling knife. Why? The price going fast towards your stop loss. What if it does not stop? It crosses your stop loss. If you enter here, just because the price coming into the zone, you enter the short trade here. If it does not stop, it goes and stopped out. It's not a good sign. So that's why I say, don't catch a falling knife. Think about it. If you drop a knife, if you try to catch in between before it hits the ground, you're going to get hurt. Same way, best way is, if you drop the knife, let it reach the ground, let it bounce, at least bounce, settle down before you pick it up. Same way. I'm going to do the same way. Okay, look at this. Price going towards stop loss. I won't take the trade immediately until I see some reaction. See this? It kind of bounce reaction. You can see that right away. You can see the little bit of bounce reaction. That is the best way to enter. When the knife is falling, don't catch it when it's before it hit the ground. Let it hit the ground, let it bounce, let it settle, and then you can take it. Now you can see the price going towards the stop loss. Here you can take the trade. Compared to here, is still off the risk. Look at this. From here to here is still off of the risk dollar value. You can still take it. So don't forget this rule. Don't try to catch a falling knife. That means just because you have a signal, if the price reversing fast towards your stop loss, don't take immediately. Look at this. All I see is green bars coming towards the stop loss fast. Wait till the reaction, and then take it. All right. So one more thing I want to share today is, if you learn this strategy very, very well, I want you to know the best day to trade this kind of strategy is on a choppy days. Why? When the price moves very fast, on a trending days. Signal comes in, moves fast, there is no pullbacks, or there might be, you never know. Yes, you can take the trades, it's going to work, but you require to take a bigger risk. But think about the choppy days. Look at this. This is February 9th, February 8th. The whole day. Look at our system is able to find the top edge and bottom edge. Can you see it? If you say same thing, if you look at here in the regular charts, you can't see anything, and there's no clear way to trade. You don't know how you trade. This is exactly why we hear again and again traders say, "Oh, today is really choppy, sideways market. I don't want to trade," because it's really hard. Trust me, it's really hard to trade on a choppy day. But our system, think about it. If you have a clear boundary set by the system, every time the price goes back to the zone, you wait till the reaction comes in, take the trade. You can scalp in between those 2 points. You can really scalp between if you use the strategy in terms of we have the solid boundaries, don't take the trade immediately, wait till the reaction, enter, scalp until here. You can scalp between those points. So please practice this, test it enough, try to enter the trade with a minimal risk, don't chase the entry and then try to have a large risk. At the same time, don't have fixed stop loss. Again, stop loss should go where the stop loss should go. There is no trade-off. Okay. Again, next time when you see a choppy trade, next time when you see a choppy trading session, jump on it. Practice this scalping strategy because choppy days tend to have well-defined and solid top supply and bottom demand zones. You can scalp in between. That's all I have for today. Hope I'm able to convey the message that I want to convey. If you have any questions, suggestions, feedback, you hate it, like it, anyway, please reply back to me or reach us to us. We are happy to hear your feedback and suggestions, everything. I always mention practice, practice, and practice. There is no shortcut. Take your time to learn and master the life trading skill. Again, if you are, I don't know, I think here, if you are new, I think you can go to buysideglobal.com/signals to get the 7-day free trial. Okay, 7-day free trial, buysideglobal.com/signals. Get 7-day free trial for the trading signals based on supply and demand, custom charts, everything together. Have a great day, guys. Thank you so much.